Here's a detailed summary of Rivian's 2025 Q4 earnings call transcript, designed for reading aloud. Rivian's 2025 fourth quarter and full year earnings call summary. Good afternoon, everyone. Today, we'll be summarizing Rivian's fourth quarter and full year 2025 earnings call, focusing on key financial metrics, management's outlook, significant risk factors, and highlights and lowlights from the call. We'll also cover the most important statements from CEO RJ Scaringe and CFO McDonough. CEO's opening remarks. RJ Scaringe. Rivian CEO RJ Scaringe kicked off the call by emphasizing 2025 as a year of execution, focused on laying the foundation for scaling the business. He highlighted the company's progress on its technology roadmap, particularly with the upcoming R2 vehicle, while simultaneously driving improvements in customer experience and the path to profitability. R1 success. Scaringe proudly announced that the R1S was the best-selling premium electric vehicle priced above $70,000 in several key states, including California and New York, and was the best-selling SUV overall, EV or non-EV, over $70,000 in California. This underscores the strength of their premium offerings. R2 launch, the mass-market game-changer. The most significant announcement was that customer deliveries of the R2, their first mass-market vehicle, are just months away. Scaringe stressed the underserved nature of the market around the $50,000 price point, where compelling EV choices are scarce compared to internal combustion or hybrid options. He believes R2 will be a game-changer by offering a smaller, more affordable yet capable and technologically advanced mid-sized SUV, inspired by the R1 experience. The launch edition R2 will feature a dual-motor, all-wheel drive setup, over 650 horsepower, and more than 300 miles of range. He drove the first R2 manufacturing validation build and cited overwhelmingly positive early media reviews. More product and pricing details are slated for March 12. AI and autonomy advancements. Rivian showcased its progress in AI and autonomy at its December event, highlighting the development of its in-house RAP1 chip for velocity, performance, and cost efficiency. They also launched Universal Hands-Free for Gen 2 customers, which has doubled customer utilization of autonomy features. The company is integrating AI across its operations and vehicles through Rivian Unified Intelligence, and the Rivian Assistant is expected to launch early this year. Volkswagen partnership. The joint venture with Volkswagen Group is progressing rapidly. Rivian has delivered vehicles for winter testing for multiple VW brands just 13 months after the JV's formation, demonstrating the scalability of their technology across different OEMs. 2026, an inflection point. Scaringe concluded by stating his confidence that 2026 will be an inflection point for Rivian, with the R2 and its technology roadmap poised to drive significant growth and profitability. He believes the future of the automotive industry is electric, autonomous, and AI-defined, positioning Rivian well for this transition. CFO's financial review and 2026 guidance. McDonough. CFO McDonough then detailed the financial performance and outlook. Key 2025 financial highlights. Average selling price, ASP, improvement, nearly $5,500 improvement year-over-year due to the introduction of second-generation R1 quad models, a higher mix of R1 units, and increased base prices for the 2026 model year. Automotive cost of goods sold, COGS, improvement, approximately $9,500 improvement year-over-year driven by material cost reductions and operational efficiencies. First full year of positive gross profit, a significant milestone, with greater than $1.3 billion of improvement in full-year gross profit from unit economics and strong software/services performance. Adjusted EBITDA finished at the favorable end of guidance due to gross profit performance and cost management. Fourth quarter 2025 financials. Consolidated revenues, approximately $1.3 billion. Consolidated gross profit, $120 million. Gross profit margin, 9%. Adjusted EBITDA loss, negative $465 million, representing a $137 million improvement from Q3 2025. Automotive segment, Q4 2025 vehicles produced, 10,974. Vehicles delivered, 9,745. Automotive revenue, $839 million. Automotive gross profit, negative $59 million, a $71 million improvement from Q3 2025, benefiting from a higher mix of commercial vans with historically low COGS per unit. Software and services segment, Q4 2025 revenue, $447 million. Gross profit, $179 million. Approximately 60% of this revenue was from the Volkswagen Group joint venture. Balance sheet, ended the year with approximately $6.1 billion of cash, cash equivalents, and short-term investments. 2026 guidance, vehicle deliveries, between 62,000 and 67,000 total vehicles across R1, R2, and commercial vans. Q1/Q2 2026 deliveries, approximately 9,000 to 11,000 per quarter, with R2 deliveries beginning in Q2, initially in small numbers. R1 and commercial van volumes are expected to be roughly in line with 2025 totals. R2 production, starting with a single shift, adding a second shift towards the end of the year. Automotive gross profit expects a year-over-year increase, but the complexity of the R2 launch will negatively impact automotive gross profit in Q2 and Q3 before becoming a benefit in Q4 as production ramps. 2026 is viewed as a transition year for automotive segment profitability, with a strong exit rate for R2 production being a key focus. Adjusted EBITDA loss, between $2.1 billion and $1.8 billion. This includes increased R&D spend for autonomy, LiDAR, RAP1 chips, point-to-point functionality expected by year-end, and SG&A growth from expanding sales and service footprints. Capital expenditures, $1.95 billion to $2.05 billion for R2 tooling, Georgia plant construction kickoff, and infrastructure build-out. Volkswagen Group Capital expects an additional $2 billion in 2026, including a $1 billion investment subject to winter testing completion and a $1 billion non-recourse debt facility. Key financial metrics summary, metric, 2025 Q4 actual, full year 2025 actual, 2026 guidance. Consolidated revenue, $1.3 billion, not applicable, not applicable. Consolidated gross profit, $120 million, greater than $1.3 billion, improvement, not applicable. Gross profit margin, 9%, not applicable, not applicable. Automotive revenue, $839 million, not applicable, not applicable. Automotive gross profit, minus $59 million, not applicable. Transition year, neg, Q2/Q3, pos Q4. Software/services revenue, $447 million, not applicable. 60% YOY growth expected. Software/services gross profit, $179 million, not applicable. Mid 30% margins expected. Total vehicle deliveries, 9,745, not applicable. 62,000 to 67,000. Adjusted EBITDA loss, minus $465 million. Favorable end of GUID, minus $2.1 billion to minus $1.8 billion. Cash and equivalents, $6.1 billion. Not applicable, not applicable. CapEx, not applicable. not applicable, $1.95 billion to $2.05 billion, significant risk factors and challenges, R2 production ramp-up complexity, launching a new vehicle model, especially a mass-market one like R2, inherently involves complex supply chain management, manufacturing ramp-up, and potential production bottlenecks. The guidance acknowledges that this will negatively impact automotive gross profit in the near term. Autonomy hardware development. The transition from Gen 2 to Gen 3 autonomy hardware, including LiDAR, represents ongoing development and investment. While initial R2 deliveries will precede Gen 3 hardware, management expressed confidence that this won't significantly hinder demand, but it's a factor in customer choice. Supply chain and material costs. While improvements were noted in 2025, the company's guidance acknowledges increases in raw material costs and the current supply chain backdrop, which are factored into financial projections. Capital expenditures. Significant capital investment is planned for 2026, including the Georgia plant and infrastructure, requiring careful financial management. Competition and market acceptance. While R1 has shown strength, the competitive EV landscape is dynamic. The R2 faces the challenge of carving out market share against established players and potentially overcoming customer hesitations regarding new technology adoption. Highlights: R1's market leadership. R1S achieving best-selling status in key premium segments in major U.S. states. R2 on the horizon. Imminent launch of R2, targeting a significant underserved mass market segment. First full year of positive gross profit, a crucial milestone demonstrating progress towards profitability. Significant COGS and ASP improvements, demonstrating operational efficiency and pricing power. Strong software and services growth, a key contributor to gross profit, with significant growth from the VW JV. Advancements in autonomy and AI, development of in-house chips, enhanced driver assistance, and future capabilities like point-to-point driving. Volkswagen partnership progress, delivering on milestones and demonstrating technology scalability. Robust cash position, ending the year with substantial liquidity. Lowlights. Continued adjusted EBITDA losses in 2026. While improving, the company is still projecting significant adjusted EBITDA losses for the upcoming year due to investment in R2 and autonomy. Negative automotive gross profit in Q2/Q3 2026. The R2 launch is expected to temporarily impact automotive gross profitability. No hardware retrofits for autonomy. Existing R1 and early R2 customers will not receive hardware upgrades for newer autonomy features like LiDAR. Most important statements from management. RJ Scaringe, CEO. 2025 was a year focused on execution at Rivian as we laid the foundations for scaling our business. We believe R2 is going to change that underserved mass market. I believe 2026 will be an inflection point for our business. I've never been more confident in the opportunity ahead for Rivian than I am today. Claire McDonough, CFO. 2025 was our first full year of positive gross profit. We expect 2026 will be an important year as we scale our business. Launching R2 will extend our brand to the mass market, and we expect R2 will drive meaningful automotive segment growth and profitability over time. Our adjusted EBITDA guidance also includes a step-up in R&D spend as we accelerate investments in our autonomy roadmap. In summary, Rivian is in a foundational year of scaling, with the highly anticipated R2 launch poised to be a significant catalyst for growth and market expansion. While challenges remain in production ramp-up and continued investment in future technology, the company has demonstrated crucial progress towards profitability and expressed strong confidence in its long-term strategy.